Welcome back to the Revivals Invoke. This is the 9th revival. In this revival, we're going to be going over displacement ranges. Now, what exactly are displacement ranges, JJ? Do you even remember what displacement ranges are after 2 years of talking about it? Well, yeah, I do. And it has been a while, I can say that much. It's been like a year and 3/4, or if you want to round it up, it's been about 2 years. But displacement ranges, as in the name, they are simply the ranges that price creates after it's done displacing. It's really it, because as you know, price is going to create ranges, period. It's simply a dealing range, but instead of us just picking a random high and random low, we're picking specifically the most recent low before the displacement and the last high or the highest high before price stops displacing. Okay, that's really all it is. And we have about 2 of them directly in front of our face right now. The second one hasn't finished forming. It's the drop lower, as you can see. But we do have one right along here. This is it right here. We're going to go ahead and begin looking at this. So, as I just said, for bullish displacement ranges, in order to highlight them, you want to find the most recent low before price began displacing higher, and then the highest high before price stopped displacing. Okay, so this would be the range right here, okay? When you highlight this range, make sure to enable your equilibrium right here, which is the 0.5, which is half of the range. That's equilibrium. Not quadrants, not all that. No, just the equilibrium. That's all you need. Because quadrants, it doesn't really, go with this. Quadrants goes with stuff for like new day opening gaps, new week opening gaps, order blocks, stuff like that. But this is a dealing range, so you want to specifically be highlighting or paying attention to the equilibrium. Now, the equilibrium of this displacement range is a very, very important part, okay? Because it can do 2 things to this equilibrium. It can respect it or disrespect it, okay? In this case, we disrespected it. Now we're going to go over what happens here. We're going to go over why it disrespected it, okay? So, first, before this displacement was even created, why did it create it? It seeked all this liquidity down here, all this accumulated sell side, and then it reversed, okay? After it reversed, creating the displacement range, we came into another high, pushed past it just a little bit, but we still created that liquidity purge, okay? After we came down, after, purging this high, there's 2 things that you want to expect. Is it going to disrespect the equilibrium of this displacement range, or is it going to simply have a retracement, respect it, and go higher? As we can clearly see, it did not do that. So let's analyze it. After price begins to reverse, we come dipping down into the equilibrium. In our heads, we're like, okay, it might go higher or it might disrespect it. We're going to see what it's going to do. After a couple hours, price starts consolidating higher, so it's not showing the willingness to, respect it. So now we're like, okay, it probably doesn't want to respect it anymore. And we're also coming to 2 fair value gaps also. We have one right here, and then we got another up here, okay? In which we have a institutional order flow entry drill on this one right about, I guess I can set it right about there. Where is it at? Do I have IO Fed here? Yep, IO Fed right there, entry drill. So we are currently respecting the fair value gap that it created after it reversed while it was, trying to retrace into this displacement range. And it came up and respected it, okay? But it's also disrespecting the equilibrium. So what is that telling us? It wants to go lower. Does it go lower? Yeah, it does. You might be like, oh, this is all in hindsight, JJ. This is not real. This is not real. Well, as you can clearly see, even in hindsight, we're going to go over multiple of these examples because this video might just be a little over 25 minutes long because this is a very helpful concept. But yeah, you'll get why this is so powerful, okay? But going over this again, price created the dealing range, the displacement range, basically same thing, but instead we're using displacement. It created the displacement range. While doing so, we purge this high, okay? After purging this high, or after seeking liquidity, we begin to reverse. Why? We might expect price to retrace into this and go higher. Because mind you, whenever price displaces, what does it create? Fair value gaps, and that's just period. Whenever price displaces, it's creating fair value gaps, and this is on every single time frame. Whenever it moves fast, it's creating fair value gaps, and it's guaranteed. It's guaranteed. Unless it's creating like 15 immediate rebalances while going down. That's the only possible way it cannot create fair value gaps, is if it keeps immediately rebalancing the fair value gaps. That's a tongue twister, but yeah, you get what I'm saying. In this case, we have fair value gaps here. So price will normally have the tendency to come refill those fair value gaps eventually, okay? Price did that. We came back down, reversed, filled both of them, okay? But pay attention to the equilibrium. Pay attention to that. We come below the equilibrium, having the tendency to fill all the gaps that price created after displacing. But notice that when we try to head back up, we can't. We can't recover. Why? Because we have this fair value gap in our way, and then we're respecting it too. Not even just because the fair value gap is there. Because remember, price can run through anything. It can run through an immediate rebalance. It can run through liquidity. It can run through a fair value gap. It can run through order block. It can run through anything. So it's not because this fair value gap is here. It's because what price is using it for, how it's using it. Because as you can see, we're disrespecting the equilibrium, and it's confirming that by coming into this fair value gap and having an institutional order flow intradrill, which is an extra confluence, that it really wants to drop lower. So for example, let's say we anticipated this reversal after we saw price respecting this fair value gap, and you're like, you know what, let's take sells at this order block right along here, this order block right here. Price comes up back into the order block, we take sells, you can set it right there, the order block, and then we set it at the high of the order block right along there. And then what you can do, if it hasn't already broken the low of the displacement range, you can set it there, or watch this, or you could do standard deviation, like so, standard deviation. So we got the 1.5 resting, I think it's some fair value gap on a higher time frame, but we do have the 1.5 resting below this low here, and then we got this undelivered fair value gap right below that low. So that is a good target that we can come and target. So we can drag our take profit right. We can drag it at the fair value gap since the 1.5 is below it, and that gives us a pretty nice trade. Let me drag this up just a little bit because it's acting as if the order block stops it out. Well, it kind of does if you don't drag it out, but right along there. There we go. So that gives you a nice, I think, 8 risk to reward if I drag it right on top of the order block. Yep, a nice 8.5 risk to reward right there. As you see, it respects the order block, and then it drops. Now, what confluences did you use here? You use 1, liquidity, 2, displacement ranges, 3, fair value gaps, 4, respect, and then 5, standard deviation. Pretty nice setup, right? Mind you, we have about 3 more examples, so let's keep it pushing. Not get distracted. I promise I won't yak this time, so I'm going to go ahead and close my mouth while I head to our next example, which is right along here. Alright, so as you can clearly see, I've already highlighted the displacement range for us. As a matter of fact, I'll highlight it again just so you know how. For bearish displacement ranges, or for moves lower like this, you want to find the most recent high before price started displacing, and then the lowest low before price stopped displacing. So it'll be that right there, and then that will be your displacement range right along there. Now we have our equilibrium right here, and then we have all these fair value gaps that need to be filled. We got a lot of them. We got this undelivered, the rest of this undelivered fair value gap right along there. We'll mark that as wherever it's at. There it is, undelivered fair value gap. Then we got this one right above here. We can keep it pink, it doesn't really matter. And then we got this one right there. And I'm sure there's more in a lower time frame, but just on the time frame we're on now, those are the 3 fair value gaps we have, okay? So the purpose of displacement ranges, and the reason it was created, is because you can use the range to determine if it's going to, try to refill some of the fair value gap and then continue lower, or if it's just going to disrespect the equilibrium and simply refill all the gaps and even push past the gaps. That's the whole purpose of it, because we use it in just the last example. And as you can see here, it's done it once again. After price came and, officially created the displacement range, it began to head back up, right? We're at the equilibrium now. Price tries to, respect it, but it can't, and it pushes through it, showing disrespect. After that, well, while it's doing that, it's also refilling this fair value gap. So that's another confluence showing that, price wants to go higher, and it wants to disrespect the equilibrium of this previous dealing range and continue filling the gaps that are above it. We got 2 more gaps here, so that's 1 that's eliminated. And as we see, if we keep looking, price is even supporting this. This buy side delivery is supporting this because look, it's respecting this fair value gap. Isn't that amazing? And then it keeps going higher from that fair value gap. It just keeps delivering higher, and it fills this fair value gap right here. And then guess what? Price keeps supporting itself, and it has this order block right along here. I don't think it comes into the breaker, but we do got this order block right along here. Yeah, it doesn't come into the breaker. But like I said, we got this right here. Price consolidates a little bit, has a little choppy price action. But remember, that's time distortion. Then that final macro comes in, the final day, the final hour of the day, which is a macro from 3 to 4 during PM session. That's a macro. Then once that kicks in, price leaves the order block and just completely disrespects the dealing range. I mean, not dealing range, but the equilibrium of the displacement range. So that is how you use it. Now let's implement a trade into this. So let's say we traded this, okay? Let's say we traded this move. Now, since we expect price to go higher, obviously our bias is, it wanted to go higher. First, if we're using only displacement ranges and no other confluences, we want to expect it to disrespect the equilibrium, correct? If we wanted to go higher, it must disrespect the equilibrium of this previous downwards displacement range. It does that. So now we're like, okay, this is great. This is great. We got this fair value gap here. Now we're like, okay, is price going to respect it? We can see that it's disrespected this equilibrium and it's filling gaps as it clearly shows that it wants to. But is this fair value gap going to support that narrative? Oh, yes, it does. Once you see that, you're like, okay, we can work with this. Now let's look for an entry. Price comes back down to that original order block that we mentioned earlier, which is right along here. And then let's say as soon as it comes into the order block, you take buys right along it, right there. You set your stop at the low of the order block, and then you set your high at the not your high, but you set your take profit at the displacement range high or standard deviation. I don't know exactly how you would use standard deviation in this case. I think you go from the low to the high. Yeah, we're right about there. Boom, standard deviated up, and look at that. The first standard deviation is landing right above the displacement range is high. Let's look for any other deviations. Second one lands a little bit above that, but it's not really advised because, as you know, the second is a little too far away from it. So the 1 would be a good target. Just the 1 by itself is pretty good. But remember, this is the 15-minute. This might be like, oh, this isn't even a whole 2 risk to reward. Well, yes, obviously, you can drop down. Once you see this 15-minute fair value get respected, you can drop down to a lower time frame and get a better entry with that same target right there, that same target, but with a smaller risk. You off this trade, you could have possibly got a 3 risk to reward if you got that lower entry, for example. If you got the entry right along here, had your stop like this on the lower time frame, and then you still set the target at that same displacement range high, you probably would have gotten a 6 risk to reward, or maybe 5, something like that. But that's just a reminder to not stay on one time frame. Okay, your different time frames are fractal, and they're all going to do the same thing. Okay, if there's an order block on one time frame, there's going to be an order block on another. You can just drop down, look for entry there. Same reward. Well, no, a larger reward, but with just way smaller risk. Okay, but that would be your trade if you were to trade the disrespect of the equilibrium of that displacement range. Now I might do just one last example here. One last example. We have this displacement range, as you see here. In this case, it did not disrespect it, but it instead respected it, as it normally should. Well, there's really no should. I'm not going to say that. There's no should. It can do both the disrespect and the respect. That's the whole reason this concept exists, is to give you a little more insight of what price wants to do. So there's no should. Let me take that back. There is no should. It's just what price can do. That's all this tells you, is what price can do and what price truly wants to do. Now, let's keep it going. This is the low. This is the high. This is the displacement range right here. As we can see, price begins retracing into the displacement range, filling any of the gaps that, price created during the displacement higher. As we can clearly see, it filled most of the gaps, all these gaps here, this undelivered fair value gap here. After that, we begin to, come above the equilibrium. We begin to respect the equilibrium. Once we see that, we're like, oh, okay, that's great. Now let's look for an entry. Let's look for some sort of entry to see if price really wants to go this way. Price begins to reverse. We have a break in market structure right along there. On this candle, we begin to come back down into this breaker. We break the breaker from this candle after it, but we're still supporting this order block right here. But, for example, let's say after that, you trusted the immediate rebalance, which is right along there. That would be your immediate rebalance. Once price comes back down and immediately rebalances that fair value gap, let's say you trust it, you take buys, you're like, okay, let's do this. And you set your stop at the bottom of the immediate rebalance. And then you standard deviate like this, 1, 2. And you could either use, like I said, the displacement range high, which is right there, or you look at your standard deviations and see what else you can target. Clearly, there is literally nothing else here. If I keep scrolling, there's literally nothing. So your only target for right now is the high of the displacement range, which gives you a nice 2 risk to reward if we're just staying on the 15-minute time frame. But remember, like I said, you can drop down to the 1 minute, 3 minute, 15 second. I go all the way down to the 15 second. I don't know about you guys, just to minimize that risk and get all that reward, that nice, beautiful moolah. But just staying on the 15-minute, you'll get a 2 risk reward. But I'm sure if you drop down lower, you would have got a pretty a better entry with more reward and lower risk. Okay, we're at the end. The end of the video. There's 3 examples. I think I went over them pretty well and explained them pretty well to you, so you can understand what in the world displacement ranges are and how to use them. I'm gonna be ending this video here, and I'll see you guys in the next one. Peace.